So now let's talk about eggshell audits. Again, these are those audits where you're sort of walking on eggshells trying to keep your client out of the criminal crosshairs, so to speak. So when I talk about eggshell audits, I'm talking about a civil exam with underlying criminal issues. Those can be cases where there's material understatement of income, overstatement of deductions. A lot of these times this comes in where you've got a client who's under audit, and the agent identifies something or asks a certain question, and then the client has one of those, oh yeah, I need to tell you about something. Or maybe even when the audit starts, the client walks into your office and says, got to tell you about something. I left off $2 million of income that I get every year from this contract, and I never put it on my return, right? So you become aware that, there's an issue here. There's something that the IRS may not know about that wasn't on the return that could be a criminal issue, right? Now, some notable warning signs that the IRS has sort of figured it out. In other words, the agent has sort of started to clue in that something may be criminal. If you've got a case that's going on, you're representing a taxpayer and you're answering IDRs, you're responding with documents, you've been talking with them, and all of a sudden the agent stops the exam and becomes unreachable, and they won't return calls, and you can't get to them, and it's just really weird, right? Sometimes that can be, and we'll talk about later why this is, it's because they've referred the case. They've sent it to a fraud technical advisor and they said, we think there may be criminal issues. And the IRM instructs agents when that happens to basically stop the civil exam. Now, they can pick it up again depending on the outcome, which we'll talk about in a second, but there's specific case law reasons why the IRS is a little bit concerned. They don't like to generally conduct civil and criminal cases together because there can be some issues there for them from a constitutional standpoint. So oftentimes, not oftentimes, the revenue agents are directed to stop the civil exam. Now, of course, that's not necessarily to say every time all of a sudden your revenue agent becomes unreachable, you've got a potential criminal referral, right? People go on vacation, get reassigned, all kinds of things happen. So that's not a guaranteed sign, but that if you've got an eggshell audit and that happens, that's concerning, right? Other indications, the revenue agent starts focusing on the taxpayer's intent or knowledge, or starts talking about a pattern of misbehavior or underreporting or failing to file over several tax periods. Now, to be fair, they could also be developing civil fraud because those sort of elements are basically the same for civil and criminal fraud. Like I said, it's just a higher standard of proof in criminal. So that might not indicate criminal, but that probably does indicate some level of fraud, or at least they're looking at that issue. And of course, if two special agents with guns and badges visit your client, that is a really bad sign. Then your client probably has a real problem, unless they're just a witness, which will become clear fairly short after this has begun. Now, one thing to note, you can absolutely, if you're the practitioner, call up the IRS. Let's assume that you have a situation where the revenue agent becomes unavailable and you suspect it may be a criminal issue. You can call them up, and if you can get them on the phone, or you call their manager and get them on the phone, you can ask, hey, is there a criminal referral in effect? And what the IRM and the case law says is they cannot lie to you. In other words, they cannot say, oh, no, we're just on vacation, no big deal, just keep submitting documents, go ahead, no big deal. There's no criminal investigation. If that's not true and they lie about it, the whole case is probably getting thrown out. So they cannot do that. What they will probably do is say, I cannot comment on that, or sorry, I can't talk about this. Well, that probably gives you a good sense that something bad is about to happen, right? So they sort of give it away without giving it away. One thing to note, though, is, again, if you call them up and ask them about that, and it turns out they were just on vacation, they might be thinking in the back of their mind, why would this person call and ask me about that? Should I be considering a criminal investigation? So, again, think about that strategically, whether or not you want to reach out if you're worried that there might be a criminal investigation. Generally, you don't do that unless you've got a pressing concern. One other thing to consider about in these eggshell audits is privilege, right? So normally, for many of you, you probably know Section 7525 of the code embodies sort of the tax practitioner privilege. And the tax practitioner privilege says, preparers, CPAs, anyone who's a tax practitioner has a privilege with respect to their client, meaning what the client tells them about their situation is protected from disclosure to the government, okay? Well, that only applies in non-criminal tax matters before the IRS, meaning what doesn't that apply to? State tax matters or matters in state court, and to criminal tax matters. So if you're a CPA, and your client walks into your office and starts confessing about this gigantic tax scheme that they've involved in, or these unreported foreign assets, or whatever the case may be, you may want to just say, hey, hold on, stop, because what you're telling me could be criminal. If it's criminal, I could testify against you. Not that you'd want to, but I might be forced to. I would have no privilege because it is a criminal matter. So you may just stop them there and say, we need to bring in an attorney, because the attorney-client privilege does survive in criminal matters, meaning if they start talking to an attorney about a criminal matter, the attorney cannot be forced to reveal that information to the government. Okay. Now, there's something I use routinely called Covell arrangements. That's basically where an attorney would sort of engage, so to speak, another professional, maybe an accountant or an enrolled agent, a preparer, in a confidential relationship where the preparer or the CPA is assisting the attorney in providing advice to the client. And there's a case called Covell, which basically says in those situations, that gives protection under the attorney-client privilege to the other tax professional, so that if the client is making disclosures and talking about it to the attorney and the other tax professional, it's all covered by the attorney-client privilege, which means even if it's a criminal tax matter, it is still covered by privilege. So again, very important to have in place if a client has some criminal risk. There's exceptions to privilege. This applies to both 7525 and the attorney-client privilege. Tax shelters, right? I mean, if you've got a client who comes into your office and they are marketing tax shelters and they're asking for your advice on it, just be aware that advice is probably not going to be privileged, even if you are an attorney. Crime fraud exception, this is the classic, Law and Order scenario. Client walks into a lawyer's office and says, I'm going to murder my spouse tomorrow. Well, is that protected by privilege? No. Again, it's a future crime. Just like if a client walks into your office and says, I'd like you to help me to design the mother of all tax shelters, and I want it all to be privileged. Well, truthfully, it's probably not going to be privileged because you can't help a client engage in criminal conduct. Waiver is another big issue for attorney-client privilege and for 7525. So one prime example of this is AD Investment Fund, LLC v. Commissioner. And that case is a case where the taxpayer got a bunch of tax opinions on a transaction. Transaction was disallowed. Penalties were imposed. Went to court. Taxpayer says, I had reasonable cause and good faith. I had all these tax opinions. Government says, great, love to see them. Let's see what they say. Taxpayer says, sorry, you can't see them. They're privileged. Okay. Court says, no, sorry, taxpayer. You're the one who raised reasonable cause and good faith. You said that based on these tax opinions, I have a defense to penalties. You can't use it, and this is sort of called the sword and the shield doctrine. You can't use a privileged document to attack the IRS as a defense against penalty, but then say, oops, shield, you can't see it, right? And so again, just keep in mind, if you have given a client advice and they're going to use it as a penalty defense, right? And it's especially for reasonable cause where it puts their state of mind at play and their understanding of the opinion that you wrote them. Using that may waive the privilege related to that opinion and the advice and the things they told you surrounding that particular tax opinion that you might have given them. So again, just something to be aware of before you raise that defense. Also, disclosure to adversaries will waive privilege just as a general rule. So of course, be careful who you discuss privileged communications with. I mentioned I speak on ethical issues often, and so I see a lot of issues here. And I'd be remiss if I didn't note that in eggshell audits, ethical issues can be heightened because clients are very concerned. They, sometimes when clients are backed into a corner, sometimes they will say mistruths or omit certain things. And so, as one of my former mentors said, sometimes with clients, the truth is a journey, right? You're sort of trying to get to the truth with your own client. And so part of that is maintaining your highest ethical standards. So again, just some rules to keep in mind. Circular 230, which regulates all tax professionals. Well, not all, I should say. Under the current case law, it's enrolled agents, CPAs, lawyers who are practicing before the IRS. Just keep in mind, when you're giving written advice to clients, it's got to be reasonable. You make reasonable efforts to ascertain the facts. You can't rely on unreasonable assumptions. When you're making representations, written or oral, to the IRS in the course of a civil audit or an eggshell audit, as this case may be, you have to undertake reasonable due diligence. Now, do you have to audit everything your client gives you to make sure it's 100% true? No, of course not. But if what the ethics rules say is if you have reason to know or reason to believe that what the client has given you is not accurate, you must make further inquiry. So you can't just take the client's word for it if you have reason to believe that something you're about to submit to the IRS is not accurate. Circular 30, 10.33 says you must act fairly and with integrity with respect to the IRS. And 10.34 says you must take reasonable positions. So if your client wants you to take some position that's not supportable under the law, you're not allowed to do that, ethically speaking. All right. And of course, if you're an attorney, you cannot mislead the IRS deliberately by misstatements or omissions. So just when you're handling these cases, make sure you abide by your ethical obligations. What happens if the rules are broken? Bad things can happen to you as a practitioner, right? Under Circular 230, 1050, the IRS can censure, suspend, or disbar you, meaning you cannot practice before the IRS again. That can have a huge detriment on your professional career, obviously. In addition, the Department of Justice and IRS OPR, the Office of Professional Responsibility, can seek a civil injunction to stop you if you're a preparer or a practitioner from giving certain advice, from preparing returns. And I've had many of these cases, and one thing that you see in these cases, oftentimes the DOJ will go in and say, hey, we want to get a preliminary injunction against this tax return preparer because we think they're preparing returns that have false positions on them, or they're taking positions that are tax shelters. And sometimes the courts will grant a preliminary injunction and make these people send out notices to all their clients saying, I've been enjoined, I'm not allowed to prepare returns this filing season. And even if that gets overturned later on, obviously, you can imagine that has a very detrimental effect on the business. And so those are heavy sanctions that the DOJ can approach if they believe, again, you as a practitioner are not following your ethical standards and are helping clients engage in potentially fraudulent activities. Okay. There's plenty of also penalties in the code for aiding and abetting clients in understating their tax, filing false returns, filing false documents. No one, of course, wants to get involved in any of those types of issues. And again, as one of my former mentors used to say, if someone's going to jail, make sure it's the client, right? Of course, I'm just kidding. You don't want anyone going to jail, but at the core of it, we're all practitioners and professionals, and we have a duty to uphold the highest ethical standards, regardless of what the clients may want. It's our duty to tell them what they can do and what's within the bounds of the law. Going in on that line, in these eggshell audits, sometimes the question comes up, do we fix it? Well, we've got an audit going on, or we know an audit's about to begin. We've identified a potential issue, maybe a big issue. Do we have a duty to file amended returns? Clients often ask that question. Well, the answer is actually no. Clients, taxpayers have no duty to file an amended return. The closest you get to it is the middle bullet point on this slide. So Circular 30 is the first one, but the second one, 26 CFR, basically says if a taxpayer ascertains that item should have been included in gross income in a prior year, he should, if within the period of limitation, file an amended return, pay tax due. Notice the word, it's a should, it's not a must, meaning taxpayers don't have a legal duty to fix an error on a prior return. Now, you can see from the AICPA standards and Circular 230 on the slide, we as tax practitioners have a duty to tell the client that they made an error, they've identified an error, and the potential penalties thereof. In other words, criminal or civil potential penalties. The AICPA goes a little beyond Circular 230 and says also you should recommend corrective measures. And then, of course, it's your decision to some extent whether or not you continue with a client who doesn't want to take those corrective measures. But we do have a duty to inform clients that they should, or at least of the penalties, but the clients don't have to listen to our advice. They do not have to file an amended return. Now, what happens about if you've identified a real criminal issue? Can you tell a client just don't file a return for the current year because you've got a criminal issue and you don't want to further incriminate yourself? You can't do that. You can't just tell a client not to file a return. They won't be able to rely on that advice anyway. That is not the answer. However, looking at the next slide, clients do have a Fifth Amendment right not to incriminate themselves, and that does apply to tax returns filing. Now, you can't just advise a client to basically file an income tax return and write Fifth Amendment on the front and then put everything else is just zeros, right? That is not a valid return, okay? However, let's imagine a situation, this is a real life example from this particular case on the fourth bullet point, use of SADA v. Commissioner. The client has maybe an unreported foreign bank account where they didn't report interest income from that bank account on Schedule B. it's a criminal. Let's assume that we're at the level where it's potentially criminal exposure, and they don't want to give the IRS the smoking gun, meaning the amount of unreported income or the name of the bank, because maybe the government doesn't know about it. But you need to file a return. What can they do? Well, one option is to file a Fifth Amendment return. Everything else goes on the return as normal. The tax is calculated as normal. But on Schedule B, you block out the name of the bank and the amount of the unreported income, and you just put Fifth Amendment, okay, and you file it. And what the USASADA case said is that is a valid return. It is not a frivolous return. The IRS cannot impose frivolous return penalties on it as long as there's sufficient information to allow the IRS to determine the substantial correctness of the return. And it's fine to black out certain lines if you claim a Fifth Amendment privilege. So that is an option. Civil penalties, again, this is just for your information. There are obviously one of the alternatives to criminal enforcement is the civil process. And so there's obviously civil penalties that can apply in lieu of criminal penalties, or potentially in addition to in some cases. All right. So let's assume that a fraud technical advisor has looked at your case and says, this is not an eggshell audit. We think there's actual fraud. Okay, so the FTA has determined that there are indications and badges of fraud. The compliance employee, meaning the revenue officer examiner, suspends the examination or collection activity without disclosing to the taxpayer or representative the reason for the suspension. But like I said before, they can't lie to you. If you ask about it, is there a criminal issue? They can't say, no, there's nothing there. They cannot do that. They cannot give a false or deceitful response. So you do have that option to ask.